Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest time updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at noon and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. What if the next financial revolution wasn't happening on Wall Street, but quietly building underneath the global banking system? Right now, governments are racing to modernize money. Banks are experimenting with tokenized assets. Artificial intelligence is accelerating faster than regulation can keep up. And in the background, quantum computing threats to break the very security systems traditional finance relies on. But while most people are focused only on price charts, a much bigger structural shift may already be underway. Let that sink in, ladies and gentlemen. Because this isn't just about crypto anymore. It's about who builds the infrastructure for the next era of global finance. And one digital asset keeps appearing at the center of that conversation: XRP. Ladies and gentlemen, we got to talk about something that most people still don't fully understand or grasp yet. Because while social media is busy debating short-term price action and institutions are discussing tokenized debt markets, stablecoins, infrastructure, and quantum resistance financial systems. That's the real story here. Short-term noise, long-term structure, like I always say. And if you zoom out far enough, you start realizing something important. The digital asset industry is no longer just a speculative experiment. It's slowly becoming integrated into the architecture of modern finance. Now, does that mean every crypto project survives? Absolutely not. Most won't. But investors are watching closely to see which networks are positioned for institutional adoption, which ones solve real problems, which ones regulators may eventually support, and which systems could scale globally. That's where XRP, the anointed one, enters the conversation. Over the past several years, XRP has become one of the most controversial and debated assets in crypto. Some believe it could become critical infrastructure for cross-border liquidity and tokenized finance. Others remain deeply skeptical. But regardless of opinion, one thing is undeniable. The conversation around XRP is evolving. And this is no longer just about retail speculation. It's about regulation, infrastructure, liquidity, settlement, security, and potentially the future of digitalization of traditional assets. Now, here's where it gets interesting and spicing, folks. Some analysts are beginning to project extremely aggressive long-term XRP's price scenarios, numbers ranging from $300 all the way to $1,700 per token. Now, obviously, those are speculative forecasts. No guarantees, no certainty, and investors should always approach extreme predictions carefully. But what matters isn't the headlines itself. What matters is why these analysts believe those scenarios could even be theoretically possible. And their argument has very little to do with memes or hypes. It has everything to do with structural financial transformation. To understand the XRP narrative today, you first need to understand tokenization, because tokenization may become one of the largest financial shifts of the next decade, ladies and gentlemen. So what exactly is a tokenized real-world asset? Simple. Imagine taking a traditional financial instrument, a stock, bond, treasury, real estate, contract, commodity, or debt instrument, and creating a digital representation of it on a blockchain or distributed ledger. That digital representation can then move instantly, settle faster, operate 24 hours a day, and potentially reduce massive layers of inefficiency in traditional finance. This is massive. This is what institutions mean when they talk about real-world asset tokenization. And this market could become enormous because global financial markets are built on trillions upon trillions of dollars worth of assets. Debt markets alone are gigantic. Government bonds, corporate debt, treasuries, settlement systems, collateral systems, cross-border payment infrastructure. Most people have no idea how outdated some of these systems actually are. Many financial transfers still move through layers of intermediaries. Settlement can take days. Liquidity gets trapped. Operational costs remain high. Tokenization aims to streamline that process. Now, this is what most people miss. The goal isn't necessarily to replace the entire financial system overnight. The goal is modernization, efficiency, interoperability, programmability. And increasingly, major institutions are openly exploring this future. Banks, central banks, financial infrastructure firms, settlement providers, even international regulatory bodies. The conversation has shifted from will blockchain matter to how do we integrate it safely. That's a massive difference. And XRP supporters believe the XRP ledger could potentially play a role in this transition because of its speed, settlement, efficiency, and focus on liquidity movement. And again, that does not guarantee adoption, but the conversation itself matters. Ladies and gentlemen, you know I love analogies. I'm not used to talking to retail. Our client base, if anyone retains us in any capacity, isn't retail. But I have found that a good example goes a long way. Let's talk about the Medici banking revolution for a second. There's actually a fascinating historical parallel here. Back in Renaissance Italy, the Medici banking family transformed European finance by modernizing how money and credit moves across regions. Before advanced banking systems emerged, commerce was slow, fragmented, and risky. Merchants transporting gold across long distances faced theft, delays, and inefficiency. The Medici helped pioneer more advanced financial mechanisms, including letters of credit and interconnected banking networks. That dramatically improved commercial trade. And at first, most people distrusted the changes. But over time, the system that increased efficiency and trust ultimately became dominant. That doesn't mean blockchain is identical. History never repeats perfectly, but the pattern is familiar. When financial infrastructure evolves, the institutions enabling faster and more secure value transfer often became extremely important. And today, tokenization may represent another major infrastructure transition. Now, let's go one layer deeper, because tokenization doesn't exist in isolation. It connects directly to another major development, stablecoins. Stablecoins may end up becoming one of the most influential blockchain uses in the world. Why? Because they bridge traditional currency systems with digital settlement rails. A stablecoin is essentially a digital token pegged to a stable asset, usually fiat currency like the US dollar. And unlike high volatility cryptocurrencies, stablecoins are designed for transactional use and utility. Payments, transfers, settlement, liquidity, trading, cross-border movement. The stablecoin market has exploded over the past several years, and institutions are paying attention. Because if digital dollars can move globally in seconds rather than days, the implications are enormous, especially for emerging markets, cross-border commerce, remittance, and financial inclusion. This is why many analysts believe the next wave of blockchain adoption may not begin with speculative retail trading. We don't either. It may begin with infrastructure. Now, here's where XRP supporters become particularly optimistic. The XRP ecosystem has long emphasized cross-border settlement and liquidity movement. So as tokenized assets and stablecoins continue expanding, believers argue XRP could potentially benefit from increased demand for interoperability liquidity rails. And again, possibility, not certainty. But these are the structural conversations institutions are now having. Not memes, not hype, infrastructure. And this is happening while most retail investors are still focused only on short-term candles. Now let's talk about something that sounds almost science fiction, but may become one of the most important technological issues of the coming decade. Quantum computing. Because while blockchain technology is evolving rapidly, so are the threats facing digital infrastructure. Quantum computers operate very differently from traditional computers. And in theory, sufficiently advanced quantum systems could eventually break many forms of modern cryptography. And that matters because modern financial systems depend heavily on cryptographic security. Banking systems, communications, military systems, digital signatures, financial authentication, internet security, blockchains, everything. Now, to be clear, we are not yet at the stage where quantum computers are suddenly breaking all global encryption overnight, but governments, researchers, and technological firms are already preparing for that future possibility. And the reason this matters for crypto is simple. If digital financial infrastructure is going to survive long-term, it must evolve ahead of technological threats that includes blockchain, networks. Now, this is what most people miss. The project preparing today for tomorrow's security environment may eventually gain a major strategic advantage. Ripple has publicly discussed efforts related to strengthening and future-proofing the XRP ledger against emerging quantum threats. And whether you're bullish on XRP or not, that conversation is important because quantum resistance may eventually become a requirement for all major financial infrastructure, not just blockchain, all finance. Banks understand this, governments understand this, defense agencies understand this. And if a digital asset ecosystem demonstrates adaptability, scalability, and security resilience, institutions may pay very close attention. Think of today's financial infrastructure like medieval castles, walls. For centuries, fortified walls protected kingdoms from invasions. They worked extremely well until new technologies emerged. Once gunpowder artillery advanced, many ancient defense structures became obsolete almost overnight. The kingdoms that had adapted survived. The ones relying entirely on old defenses became vulnerable. Quantum computing may represent a similar moment for digital security. The systems preparing now for future technological realities may ultimately become the strongest foundation for the next era of finance. Let's discuss the elephant in the room right now, ladies and gentlemen. Regulation. Because no matter how advanced blockchain technology becomes, large-scale institutional adoption requires legal clarity. This is one of the biggest reasons the crypto industry has experienced so much uncertainty. Innovation moves faster than regulation, and regulators around the world have struggled to determine what qualifies as security, what qualifies as a commodity, how do digital assets be supervised, what compliance frameworks are necessary, how should stablecoins operate, how should tokenized securities be handled. These are massive questions, and the answers could shape the next decade of financial markets. Now, in the United States, investors are watching proposed legislation very closely, particularly frameworks designed to establish clearer rules for digital assets. One proposal frequently discussed within the crypto industry is the Clarity Act. Supporters believe legislation like this could help create more consistent legal frameworks for blockchain innovation and institutional participation. Again, legislation evolves. Nothing is guaranteed, but markets care deeply about regulatory certainty because institutions typically do not deploy large-scale capital into legal gray zones. That's why regulatory clarity matters so much. And XRP sits at the center of that conversation because of Ripple's long legal battle with the SEC. For years, that case created enormous uncertainty. It affected sentiment, liquidity, investor psychology, and market confidence. But the broader lessons may be even bigger. The entire industry is slowly transitioning from a speculative frontier towards regulated integration. And if that transition continues, infrastructure-focused projects could become increasingly relevant. Short-term noise, long-term structure. We always say, pay attention to what's quiet. Here's another important historical example, ladies and gentlemen. In the early 1900s, the United States banking system experienced repeated financial panics. Bank failures, liquidity crisis, economic instability. The Panic of 1907 became particularly severe, and eventually policymakers concluded that the financial system required stronger coordination and infrastructure. That process ultimately contributed to the creation of the Federal Reserve in 1913. Now, regardless of political opinion about central banking, the historical point matters. Major financial crises often accelerate structural reform. Systems evolve when old frameworks become inefficient or unstable. Today, the global financial system is once again facing transformation. Digitalization, AI, cybersecurity threats, cross-border inefficiencies, debt expansion, and tokenization. And that does not mean blockchain replaces everything. But history shows the financial infrastructure rarely stays static forever. Now let's talk about psychology, because market psychology may be one of the most misunderstood forces in investing. Every cycle follows emotional patterns: excitement, euphoria, fear, disbelief, capitulation, recovery. And XRP investors know this pattern very well. Back in 2017, XRP experienced one of the most explosive moves in crypto history. It went from fractions of a cent to over $3, and at the time, very few people believed such a move was possible. Then came the correction, the skepticism, the ridicule, the lawsuits, the uncertainty. And during the SEC case, many investors assumed XRP was finished. But here is where it gets interesting. Historically, markets often produce their strongest rebounds during periods of maximum pessimism. And again, no guarantees. Past performance never ensures future results. Write that down. But understanding psychology matters because emotional investing destroys portfolios. People buy euphoria, sell fear, chase narratives, and panic during volatility, and they get chopped up like sushi, unfortunately, because of this. Ladies and gentlemen, the current market uncertainty may resemble previous periods where XRP was heavily underestimated. That's the thesis. Whether it ultimately proves correct remains unknown. But structurally, supporters believe XRP's ecosystem today is significantly more mature than during previous cycles. There's greater institutional awareness, more regulatory discussions, more tokenization development, more infrastructure focus, more global attention on digital settlement systems. And if those trends continue, investors believe the market could eventually reprice XRP very aggressively. Again, possibility, not certainty. This is not financial advice, just my opinion. Price is reacting. The system is evolving. The $300 to $1,700 question. The $300 to $1,700 question. Now we need to address the massive elephant in the room. The extreme XRP price forecasts, because whenever analysts start talking about 3-digit or 4-digit XRP valuations, reactions become very emotional. Some people immediately call it impossible, others become euphoric, but serious investors should approach these conversations very carefully. Most analysts projecting extremely high XRP valuations are basing those scenarios on a combination of factors. Write these down: potentially tokenized asset growth, cross-border liquidity demand, institutional integration, scarcity models, historically price expansion patterns, and assumptions about global financial adoption. The critical word here is assumptions, ladies and gentlemen. Assumptions. These are theoretical scenarios, not guarantees. And it's important to separate infrastructure potential from speculative certainty, because the crypto industry remains highly volatile, highly competitive, and deeply influenced by regulation, liquidity cycles, and macroeconomic conditions. Now, this is what most people miss. The reasons these forecasts attract attention isn't just the numbers itself, it's what the numbers imply. It implies some analysts believe blockchain-based financial infrastructure could eventually process enormous amounts of value. That's the real conversation. Could tokenized financial markets become massive? Possibility. Could cross-border settlement systems evolve dramatically? Potentially. Could digital liquid infrastructure become increasingly important? Many institutions appear to think so. And if XRP participants meaningfully in that ecosystem, bullish investors argue its valuation could expand substantially. Again, no certainty, no guarantees, but the structural thesis is much bigger than the short-term trading. I want you to think about the railroad expansion during the Industrial Revolution, ladies and gentlemen. At first, many people viewed railroads as speculative and chaotic. Some railroad companies collapsed, others became foundational infrastructure for entire economies. The tracks themselves changed how goods, commerce, and capital moved across nations. Today, blockchain infrastructure may be entering a similar phase. Not every network will survive. Not every project succeeds. But the systems enabling faster movement of value in a digital economy could eventually become deeply important. And investors are trying to determine which rails institutions may ultimately trust. Let's zoom out globally now, because one of the biggest long-term crypto narratives has very little to do with wealthy investors. It's about access. Billions of people around the world still lack reliable banking infrastructure, limited access to credit, slow remittance systems, currency instability, restricted financial participation. This is where digital financial infrastructure becomes incredibly important. If blockchain systems can reduce transaction costs, improve settlement efficiency, and increase accessibility, the implications extend far beyond speculation. This is why some people within the digital asset industry believe the long-term opportunity is enormous, because adoption remains incredibly early. Even today, only a tiny percentage of the global population actively participates in digital assets, and even a smaller percentage understand infrastructure-focused projects like XRP. That means the market may still be in the very early stages of development. Again, early does not guarantee success, but structurally, many investors believe blockchain adoption could expand significantly over the coming decades, especially as younger generations become more digitally native. As a financial system modernizes and tokenization gains traction. Now let's discuss current positioning, because many XRP investors believe today's prices may eventually look very small in hindsight. That's the Gucci conviction-based thesis that we go over. Some traders are watching support zones around $1.30. Others believe a potential double bottom scenario near 115 could emerge. Technical analysis aside, the broader psychological argument is simple. Periods of fear often create opportunity. Again, not always. Markets can remain volatile. Downtrends can continue longer than expected. But historically, major crypto recoveries have often happened violently and unexpectedly, and leads to rip-your-face-off rallies, not financial advice. Not gradually, but suddenly. Ladies and gentlemen, I want you to think about a trampoline effect. Pressure builds, sentiment weakens, participants lose conviction, and then the markets rebound sharply when liquidity momentum returns. Whether XRP experiences another explosive cycle remains uncertain. But many long-term holders believe the combination of infrastructure development, regulatory progress, and tokenization growth and institutional adoption narratives could eventually trigger a major repricing event. That's the thesis. And more importantly, conviction matters, because high volatility markets emotionally test investors constantly. Now, this is the part is extremely important because whenever markets become emotional, education becomes critical. The crypto industry moves very fast. Narratives change quickly. Volatility remains intense. Misinformation spreads constantly. And without proper risk management, many investors make catastrophic mistakes. Overexposure, emotional trading, leverage misuse, panic selling, blind speculation. This is why experienced investors often emphasize portfolio management, psychological discipline, research, and long-term planning, not hype. Ladies and gentlemen, this is why we formed the Crypto Republic Desk Monthly inside the Patreon. It's a group designed to help seasoned investors and brand new people better understand market cycles, emotional discipline, and strategic positioning. Ladies and gentlemen, come and join over 560 members who are actively taking their own destinies into their hands. Viewers should always educate themselves, always. But at the end of the day, nothing is going to stop the financial markets from opening and closing tomorrow. The only thing that changes is your approach, your discipline, your mechanics. Come and join us and learn what we learned on the floor of the New York Mercantile Exchange. I want to welcome all the new members. I love you all because survival is the first priority in markets, especially emerging markets. If investors cannot emotionally withstand volatility, they often exit before major structural trends fully develop and they get caught up like sushi. And that's happened repeatedly throughout financial history. The only thing that changes is when you begin to understand how to feast on the sushi, not getting chopped up by the sushi. That is the difference between a financial mercenary and a spectator. Here's the bigger picture, ladies and gentlemen. So where does that leave us all? Here's the reality. The world is entering a period of enormous technological and financial transformation. Artificial intelligence is accelerating. Quantum computing is advancing. Governments are exploring digital currencies. Banks are experimenting tokenized assets. Stablecoins are growing rapidly. Regulators are building frameworks. And underneath all of it, infrastructure is evolving. That's the key idea, infrastructure. Because while traders focus on hourly charts, institutional focus on systems, settlement, security, compliance, liquidity, and scalability. And XRP continues positioning itself within those conversations. Does this guarantee success? No. Could competing technologies emerge? Absolutely. Could regulation shift unexpectedly? Of course. But structurally, the digital asset industry appears to be maturing, and the projects surviving long-term enough, integrate with institutional systems, may eventually become very important. That's why the XRP conversation has evolved beyond retail speculation. Now, this is what most people miss. The biggest opportunities in history often looked uncertain while they were developing. The internet looked uncertain. Mobile technology looked uncertain. Online commerce looked uncertain. Emerging infrastructure is messy before it becomes obvious. Again, no guarantees, no certainty, but investors are watching closely because the system itself appears to be changing. Short-term noise, long-term structure. Pay attention to what's quiet, ladies and gentlemen. The next decade may look very different, ladies and gentlemen, because at the end of the day, XRP, the anointed one, represents something much larger than a simple price chart. It represents debate about the future of finance itself. Will tokenization transform globally markets? Will stablecoins reshape payment systems? Will blockchain infrastructure integrate with banks and institutions? Will quantum-resistant networks become necessary? Will regulation finally create clarity for digital assets? These are the questions shaping the next decade. And whether you're bullish, bearish, or somewhere in between, it's becoming increasingly difficult to ignore the scale of what may be unfolding because the industry is itself incredibly early. Most of the world remains outside digital assets entirely. Most institutions are still experimenting. Most infrastructure is still developing, and yet the conversation keeps growing. Banks are discussing tokenization. Governments are studying digital settlements. Institutions are exploring blockchain integration. And investors are trying to position themselves to head of long-term structural changes. Now, will XRP reach $300, $1,700? Nobody knows. Those are speculative scenarios, not promises. But the reason people continue discussing XRP so passionately is because supporters believe it may ultimately play a meaningful role in the modernization of global finance. That's the thesis. And if the broader tokenization movement accelerates, if regulatory clarity improves, if infrastructure adoption expands, the next several years could become extremely important for the entire digital asset industry, not just XRP, the entire system, because price is reacting, but the system's evolving. And history shows that when financial infrastructures change, the world changes along with it. Always remember, ladies and gentlemen, stay informed, stay rational, think long-term, because the biggest shifts in history rarely happen overnight. They happen gradually, then suddenly, because the larger financial system may already be slowly repositioning underneath them. Short-term noise, long-term structure. Pay attention to what's quiet, ladies and gentlemen. Price is reacting, systems evolving. If you enjoyed this breakdown, make sure you subscribe, hit the like button, and join the Wolf Pack because we're tracking the macro signals, the industrial signals, and the structural changes most people overlook. Always do your own research. Never invest based solely on a YouTube video. And remember, ladies and gentlemen, short-term noise, long-term structure. Pay attention to what's quiet. I'll see you in the next one. I love you all. This content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up into the moment they're not. And this is one of those moments. Do not blink because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move that will be remembered. This is not the end of the story. This is just the beginning. If this opened your eyes, smash that like button, ring the bell, and leave us a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all. See you on the front lines.